Hey, how's it going? Anmol here. So listen, I know I haven't done a video in a really long time. And I keep getting you guys' emails, DMs on Instagram. Hey, Anmol, what's going on? Where are you? Haven't done a video in a long time. And I know I haven't done a video in a long time. I've just been really busy with all the things that I'm involved with, between my day trading stocks, swing trading stocks, trading Forex options, managing money for a lot of people in private equity and, venture capital and all those things that I'm involved with, along with angel investing. So, managing a big portfolio doesn't really afford me the time to really, create these kind of videos. And also, I'm not as good as Jared when it comes to making these nice, presentations and slideshows. He's really good at it. I'm not good at it. All I know is how to trade. I'm not really good at, PowerPoint and stuff like that. But for this one, I did make some slides for you. I tried my level best. And today I'm going to talk about a really nice swing trading strategy. Now, swing trading, as you guys know, is when you hold a stock for a few days or maybe a few weeks, right? It's only traded on a daily chart. So I'm going to share with you a really important setup that I trade pretty often. It's called the reverse 3-bar play. So you guys already know what a 3-bar play is. This is just a reverse 3-bar play where we're looking to fade a gap down, right? So when a stock gaps down, bigger the better, right? And then it sets up this reverse 3-bar play. I use this setup to fade that gap down so that it kind of goes right back up, right? Now, this is applicable to gap ups as well, but I use it specifically on the gap down side. Now, I'm going to show you the setup, but again, as time goes along, I'm going to try and do more and more of these videos, right? I learned a little bit about how to make these videos with Jared. He taught me a little bit about, PowerPoint and, stuff like that. So I bought this fancy camera, and I'm going to try and make these videos for you. So if you like the video, let me know your thoughts, and let's dive in. I'm going to jump into the computer, and let's just get straight into the setup, right? No chit-chat, no fluff. Let's get right into the setup. All right, so today I'm going to talk about a reverse 3-bar play. So as I described earlier, a reverse 3-bar strategy, again, as it says on the slide here, only to be used on a daily chart because we're playing it as a swing trade, meaning swing trade basically means you're going to hold on to the stock for a few days, sometimes even a few weeks, right? So it's not a day trade. You're going to hold on to this, right? So this is one of the strategies that I use for managing my long-term accounts and, holding stuff for a few days, few weeks and capturing those moves. The idea behind this setup is to fade a gap down. Fade means so stock gaps down, so rather than going down, you're fading it as it goes back up. So that's the gap fade. Now, this is not going to work on every single setup. So I'll tell you the criteria in a little bit, but again, notice it. It's only going to work on a daily chart. Reverse 3-bar play, we're going to trade how to fade gap downs. So let's dive in. So reverse 3-bar play rules. So the entry rules are this. So on the day one, so the first day, the stock gaps down, okay? Stock is obviously gapping down, meaning it closed a day at 38. Now it's opening at, let's say, 28, right? So it's a gapping down. Now, bigger the gap down, the better. So if a stock is gapping, yesterday was $38. And now it opens at 37. Okay, I mean, that's a gap down, but it's not significant, right? So we're looking for significant gap downs where you look at the chart, you're like, wow, look at this stock. It's down so much today, right? So bigger the gap down, the better, okay? So just don't trade it on any other gap down where a stock is at 38.20 and now it's at 38, 20-cent gap down. Doesn't mean anything. It's significant gap where you can clearly see the space on the daily chart between the prior day and today. You can clearly see the space. So day one, stock gaps down, bigger the better. Okay, now day two, it puts in a wide range day. Okay, basically on day one, when the day closes, it's a wide range day. It's either it's a big red candle, either it's a big green candle, either it's a bottoming tail, either it's a topping tail, but it's supposed to be big. Now, people ask me all the time, how do you define big? Now big is not a specific number. Like I can't say, hey, if it's a $2 gap down, it's too big, or if it's a 10% gap down, it's too big. Percentages, dollar amount doesn't mean anything in this case. It's a visual. You got to look at it with your eyes. So look at the prior days, okay? So look at the previous 1 month, all right? Look at the candles. If they're this size, right, and on the gap down day, it puts in this size, okay, now it's big, right? But if it's, this size is an average candle, all right, and the day it gaps down, it's also this side, then it's not a big candle, right? So it's got to be wide range candle. So it puts in a wide range. Color of the bar doesn't matter. Bottoming tails are fine too, okay? Now on day two, after the gap down day, so the gap down days occurred on day one, it gapped down. Now on day two, it puts in a small narrow bar, right? Small narrow bar, and it has to be inside bar. Inside bar basically means that second bar is inside the range of the first big candle. So it hasn't taken out the high or the low of that first candle, right? So day 2, inside bar. Now, day 3 is when the pattern becomes valid to be traded long above day 2's high with a stop loss under day 1's low, the gap down day's low. So now, this is basically, as I said, the name says it all. It's a reverse 3-bar play. So 3-bar play criteria is the same, right? So what's the criteria for a 3-bar play? Big wide range bar, inside bar, and blast off, right? So guys, by the way, if you haven't seen the 3-bar play video, okay, and you're just watching this, I'm going to link to the original video of the 3-bar play. I'm going to link it in the description below, so you can go ahead and watch that video, all right, in the description if you haven't seen it. I would recommend you watch that first, because then you'll understand what a reverse 3-bar is, right? But if you know what a 3-bar play is, reverse 3-bar play is basically the opposite. So rather than trading the 3-bar play to the downside, you're trading it above the second day bar as a long idea, right? So how do we manage the trade? What are the targets? So there's a few different ways you can trade it, right? This is a very simple setup, very easy setup, very easy to trade, very easy to learn, very simple. The hardest part about this setup is when to get out. How do we manage the trade when we're actually in it? That's the whole name of the game, right? Learning setups in trading, learning the strategies in trading is the easy part, right? Actually following it and then managing the trade until it exits is the toughest part about trading. That's the difference maker between pros and the novices. Simple as that. So how do we manage this trade? There's a few different ways to manage it. One is if you got guts, I was going to say a different word, but if you got guts, you're just going to target the gap fill, right? That's the easy way to do it. Now, you don't do anything. Either it fills the gap, either it stops you out. Now, this requires a lot of patience, and you might be in a trade for a few months sometimes, right? Could get big moves, but it could also be kind of, hard on your psychology holding on to that trade. So what's the second thing we can do? Second easiest way to manage it now after the gap fill, because that's the toughest one, is you target the 9 or the 21 EMA, meaning the stock is gapping down, right? So the 9 and the 21 EMA is going to be obviously above the stock. So you're going to target the snapback to the 9 EMA or the 21 EMA, and when it touches that, that's your target area, right? Different way number 3 to manage it, which is what most people do, is just aim for 2-to-1 or 3-to-1, right? If your stop loss is 30 cents, your target 60 cents or 90 cents, right? So 2 or 3 times your stop loss will be the target, right? The other way to manage it, you can either trail it bar by bar on a daily chart. So bar by bar by bar, each bar is low, you keep trailing the stop loss. That's another way to manage the trade. Okay. Now, again, if you're getting confused right now, don't worry. I'm going to actually show you some charts so it'll all start to make sense. All right. So, but daily bar by bar, the issue with that is sometimes you'll get shaken out, which we're going to show you in the chart. Sometimes you'll be in a trade for only 1 or 2 days, and then you get taken out, and then the stock goes higher again, right? The other way is, again, if you know what pivots are, you can manage it on a 60-minute pivot, right? Pivot is basically stock goes up like that, comes down, goes up, so that V low becomes the pivot. Then it does it again. That low becomes the pivot. You can trail it bar by bar. You can even target 50% of the gap fill, which I haven't written here, which I'll actually go ahead and add it right now. All right, target 50% of gap fill, meaning if you stock gaps, it's closed at 38, opens the next day at 28, right? So rather than target 38, you're going to target the halfway point, right? So maybe target 34 or something along those lines. Okay. All right. Now let's dive into the chart. So you'll notice this chart here, right? This stock, again, doesn't matter the name of the stock. See how it closes this day. Let me show you here. Hold on 1 second. All right. So you see on this day, all right, right over here, the stock is at $57, right? Then it gaps down to about $53, 52, 53, all right? And then look at how it puts in a big wide range red day on day 1 and closes all the way at 45. So that's a huge gap down. That's almost a $13 drop here, right? Big red bar. Notice the next day, inside candle, small inside candle inside the range of the first bar, right? And then the third day, again, another inside candle. So it kind of becomes a 4-bar play. And then on day 5, you actually get triggered long. So this is what the setup will look like when it triggers. Let's dive in. There you go. So that is what it will look like. You will enter above day 2's high with a stop loss under day 1's low. Okay? And then notice if you target the gap fill right on this day here, if you target the gap fill, this is it. Your target will be hit right on that gap fill. If you're trailing it daily bar by bar, you keep raising your stop loss under each day's low. Right, each day's low, and then finally on here is where you get taken out on this red bar, right? If you were targeting the moving averages, then it touched the moving averages, and that's where you would get out. So again, quick 3-4 day move and you captured a nice little gain on a swing trade. All right, let's dive into another example. Notice this chart. Stock closes the day at about $59 to $60, right? Next day opens all the way at $40, right? Big gap down. And then on that gap down day, look what it does. It goes all the way down, closes at $32. Huge move down, right? Second day, almost an inside candle. Well, in this case, it looks like it did pierce the low of the first day. But again, eyeball it. It's all a visual concept. It's still technically, I guess, considered an inside candle. And then you would enter, as we see here, boom, above day two's high, you're going to enter long, right? Put your stop loss under the low, and you're going to manage in between. Now, notice if you were targeting the gap fill, you were in this trade for almost 2 months, right? For you to get the target. If you were doing daily bar by bar, you would have probably got triggered in on this day, and you would be out somewhere around $40. So now you missed out on the big move, okay? But you still captured a $3 to $4 move on that stock. That's a good swing trade, okay? You could have even, and these black lines, they basically indicate alternate ways to place a stop loss. Because in this case, personally for me, if I was entering over this black line here, right, and putting my stop loss all the way down there, that to me would have been too big, right? So I would have chosen to maybe place it under kind of this low right over here, right, or maybe under this low here, right? So under a prior pivot low, so that way I could get a tighter stop loss and a better reward to risk on my trade. All right, so now let's take a look at another example. There you go. So now check this stock out, right? Stock, this actually has two reverse 3-bar plays. So notice on this day, closed at $13, opens at around like $9.50. Big red bar. Next day, you get an inside candle, right? And then on day 3, your setup will trigger long, right? And you can see how it went up, right? And here's another one. Stock closed at $8.50, gaps down, right, to like about $7.50, closes big bottoming tail, inside candle, and then it goes right back up. So these are two in this one chart. There are actually two. There you go. You see that? So those are potential places where you would enter and potential places where you would place your stop loss and then you would manage in between. Now, as I said, management's the tricky part. There's no right or wrong way to manage it. It's art, right? Those are the potential management techniques that I gave you in the first slide. You have to pick and choose, and more importantly, you have to track it. So what I recommend you guys do is open up a spreadsheet, right? Anytime you trade this setup, write it down, because you can see here, if you were doing daily bar by bar, you probably would be shaken out for maybe a small gain. If you were targeting the snapback to the moving average, maybe you got a little bit more. If you were targeting gap fill, guess what? You never got your target, right? So that's the important part. But as you see here, these setups give you a nice 2 to 3 day or 1 to 2 week nice moves that you can capture if you know how to manage it, right? Now here is another one that didn't work, right? Because again, this is not 100% setup, right? This is not going to work every single time, just like any other setup. And anybody else who you watch on YouTube says, oh, my setup works 100% of the time. Well, ask them, where is your Ferrari? Where is your yacht? Where is your $1 million house? Where is your nice watch? Right? Because your setup works 100% of the time, right? So where's all the nice stuff? No setup works 100% of the time, right? The important part is, even if it works 50% of the time, the important part is when you win, you capture big moves. When you lose, you cut your losses short. That's the whole name of the game in all game of trading. I personally, my win rate is like 60%, okay? So if I take 10 trades, I'm going to lose on 4 of them. I'm going to win on 6 of them. But the key is when I win 2 times my loser, right? And when I lose 1 time. So on a losing trade, I might lose $1,000. On a winning trade, I'll make $2,000. So with that mindset, even if I win half my trades, I'm a profitable trader. Heck, even if I win 40% of my trades, I'm a profitable trader. That's the whole name of the game. That is trading in a nutshell. It's a statistical game that people need to understand. So now here's a setup that didn't work. See, on this day, it stock gap down, okay? And then you got this, reverse 3-bar play setup. Now, it did kind of work, right? It went up from $2 to almost like $2.50. So maybe you could have captured a move, but it kind of just petered out and then rolled over, right? So in this setup, here's where you would have entered on the first black line right over here. Stop loss would have been under that low, and it went up a little bit, and then it petered out. So in this case, maybe based on your management, maybe it was a break-even trade, maybe it was a small losing trade, right? So that's one thing you could consider. Now, let's take a look at another one, okay? By the way, how does my PowerPoint work, right? I create amazing slides. No, Jared's slides are still better, but I'm trying my best. I'm learning, so go easy on me, okay? So again, day one, stock gaps down. Big gap down from $9 to like $4. Big red day. Next day, what you get? Inside candle. And then look at the stock, right? Went all the way from $3 to $6.50, right? That's a big move, right? How you capture it, again, management, that's the name of the game. I usually do 2 to 1. Meaning if my stop loss is 10 cents, my target's going to be 20 cents, right? If my stop loss is $1, my target's going to be $2. If my stop loss is 50 cents, my target's going to be $1, right? So I usually do 2 to 1, and I don't touch it in between, let it gyrate and do its thing. Eventually, I usually get 2 to 1 60% of the time. Now here's the setup. So you would have entered over here, okay? Either above day two's high, or in this case, if you were watching it, it pivoted, you would enter over this little black line, put your stop under day one's low, or you could even enter over here on the second bar's high, again, stop under day one's low, and then stock goes up, right? Let me show you another example. Notice on this day, stock gaps to $15, opens at 9, right? Gets a huge volume day. Now, here's the key. On this setup, I hope somebody, before you guys ask it, it's not a wide range bar, right? So technically, this is not a great setup because the day one is not a wide range candle. It's an average candle just like it had any other day. So it's not a wide range candle, right? But because of this big gap down and the huge volume spike and this coincidental base that formed after, I personally gave it a pass, right? But this is not a textbook setup. Now, here's how it'll trigger. You enter over day one's high, stop. You could either put under the base or you could put under day one's low. And again, manage in between as the stock fades the gap down. Okay, here's another one. Note on this day, stock gaps down. Now, this is another one. I'm showing you these weird kind of setups because not every setup is going to be textbook, right? In real market, it doesn't listen to slideshows. Real markets are always different. It doesn't care about PowerPoint slides. So this one is another one that I personally would probably recommend you not take. Why? So I'll give you 5 seconds. Think about it. Why? Think about it. I'll tell you why. Well, because it's not a big gap down, right? It's not a big gap down. It's a regular size gap down. So this would not qualify, right? But as an example purposes, if you wanted to trade it because the setup was still valid, enter above day two's high, stop under day one's low, and you can see how stock slowly petered out and filled the gap. Here's another one. Stock gaps down, boom, from $58 to $48, goes down to $44. Wide range bottoming tail candle on high volume, inside candle, boom. Here's what you're going to do on that. Enter above day two's high, stop under day one's low. Now notice how I put this slide specifically for a reason, because real markets are different, okay? So that's why one thing I don't get, people on YouTube, like they show these fancy slides. Oh, look at this beautiful setup. Well, they don't always look that pretty, right? They don't always look that exactly textbook. Real market, sometimes a little bit different, right? So that's the specific reason I showed you, because you would have entered above day two's high, put a stop under day two's low. Now, eventually, yes, it went up and filled the gap as it should, but look what it did, right? Look what it did. It kind of wiggled around for like a week, right? Wiggled around for like a week. If you were raising your stop loss under prior bar's low, you're already out somewhere here, giving you a heart attack. But then this setup finally goes and fills the gap. Now, here's the important part, right? You could be scared and you could have dumped it here, right? But if you notice, it never actually kind of took out that day one's low, or even if it did, it took it out perhaps by a little bit. So you could have either taken a small loss on this, but let's see. I mean, I have to look at the chart again, but maybe it held that low right to the penny, right? So if you're doing all or nothing, this setup probably would have hit your target. The hardest part about trading, guys, is managing the trade, because there's no right or wrong approach, right? And anybody tells you otherwise is lying. There's no one best way to ride a trade or manage a trade or trail a trade, right? You got to just, sometimes it's art, and then you got to track. So in this case, if I was trading it, I probably would have broken even on this trade, or maybe lost a little bit of money, right? because I would have entered above the day two's high. And when I got this green candle, I probably would have put my stop right under the green candle. So I would already be out for like a break-even trade on this one. So, or a small loss, in fact. So this is one that I wouldn't have made money on. But again, if somebody was like, you know what, I'm just going to get in, put my stop all the way under the lows or a few pennies under the low, and I'm just going to hold it. That person eventually got that target on the same stock. But the key is the setup. The key for you to learn here is the setup works. Let's jump into another slide. Here's another one, a little bit different, right? Stock gaps down from $9.50 all the way to $8. Now, this one's different because all the previous ones I showed you were big red candles. This one's a big green candle, still valid, right? Because you got a gap down, decent sized gap down too, big wide range candle, right? You got that inside bar, and then boom, enter long, put your stop loss here, stock gaps down, and then it ends up fading and actually making a whole new high. So again, these are great setup for swing trades. So that's why I don't want you guys to focus specifically on day trading. Swing trading has great potential to make you a lot of money, right? Especially if you got under $25,000 in your account, you should be doing more of swing trading, right? Because if you hold the stock more than a day, it doesn't matter. You're not under PDT rule, so you can trade as much as you want. All right. Now, a few more setups, and then we're going to do closing. Here's another example of a setup that didn't work, right? And I put this specifically in here because I want you guys to have realistic expectations, right? I don't want to hear an email, Anmol, I took a reverse 3-bar play, it didn't work. Well, yeah, you know, if you take 10, probably 4 of them are going to fail, right? 6 of them are going to work. But if you're making more, if you're making 2 times on your winners, you're going to be a profitable trader in the long run. But not everyone's going to work. And anybody who tells you otherwise is lying. So on this one, you would have entered long above this high, stop above, below these low. It kind of went up a little bit and it teetered out a little bit and then eventually went back up a little bit, but eventually didn't work, right? Here's another one. On day one, big gap down, nice, right? Love it. But notice on day one, it's not a wide range candle, right? But I still traded it just because of this big, huge volume spike, kind of telling me that, okay, it might be kind of done going down, right? And there you go. Buy above second day's high, stop above 1 day's low, and look at that. Look at that grind back up into that gap fill. I mean, I love this setup, guys. I love this setup. So I got tons more slides, but I think you get the point, right? You guys are smart. You guys are not like, I got to show you 100 slides of the same setup. I got a bunch of slides like that. I mean, there's so many setups, and but you guys get the point, right? You see the setup. It's basically a 3-bar play, but instead of trading it as a 3-bar play, we're flipping it, but it's only on a gap down. So again, let me show you the criteria again, so you guys make sense. So day one, stock gaps down, puts in a wide range bar. Doesn't matter the color of the bar. Tails are fine too. Day two stays inside day one. You buy above day two, stop below day one. And on day 3 is when it triggers, and then manage in between. That's the key part, as I said, right? How you manage it. I personally do 2 to 1. If it hits 2 to 1, great. If it stops me out, great. Nothing in between. That's what I personally do. But you can target, again, these are the potential targets. You can target gap fill. You can target the 9 of the 21 EMA. You can simply shoot for 2 to or 3 to 1. You can also trail bar on a daily chart, 60-minute pivots, or 50%, half of the gap fill. Those are the potential ways to manage it. Now, here's what I want you guys to do. If you trade this setup, I want you to make a spreadsheet and write your setups down, and also track it. If I targeted for gap fill, how much would I have made? If I shoot for 9 EMA, how much would I have made? If I targeted 50% of the gap fill, how much did I make? If I trailed the daily bar by bar, how much did I make? So the reason I'm telling you this is because after taking 100 of these trades, if you track the management, you're going to find out, okay, you know what? That simply shooting for 3 to 1 is actually the best way to manage it. And guess what you do in the future? Now you don't need to track it anymore. You can simply just do 3 to 1 because that works the best. So track it. That's the key. And another thing, I want you guys to also focus on swing trading. Don't just look at day trading. Day trading is fantastic. I do day trading every day, right? But day trading, I call it day trading for income. Meaning day trading is what you trade for income. That's what you live off. That's what you use to pay your bills, right? Swing trading is to build wealth. So you take an account and you keep growing it into a bigger and bigger one, right? That's called wealth building. Now, for people under $25,000, this is the best way to this is the best way to involve in the markets, because if you got under $25,000, you can't really day trade. But what you can do is these setups, swing trade. Because if you hold it for more than a day, guess what? It's not a day trade, so you're not under PDT rules. So you can trade as many of these setups as you want. And you can also trade the 3-bar plays on a daily chart as you want. So start trading those, grow your account above 25K, and then you can come into day trading, right? So that's what I would suggest. So those of you who were complaining about, hey, I don't have $25,000. I get it. It's an annoying rule by SEC or FINRA, but this is what you can do. Play the game, right? Other thing also is focus on swing trading. So I do a lot of swing trading. I manage money for a lot of people, friends and family. So, I do a lot of that. So with their money, I don't day trade, right? I day trade with my own money. With other people's money, I do these swing trading and, core trading and long-term trading. And then obviously I take a percentage off, whatever I make for them. And that's what I do for my friends and family. So that's what I would suggest. Learn the setup. Simple. If you didn't get it, watch this video again and you're going to get it. Now, again, let me know what you think, all right? I'm going to try and make more and more of these for you as time goes along. Have a good one, guys. I got to run. Take care. All right, so what did you think? Hope you guys enjoyed the video. If you liked it, click the like button, right? Subscribe to the channel, and also email me. My email is unmol@livetraders.com. Feel free to email me. I try my best to respond. As you guys know, I am pretty busy with all the things I'm involved with, but I will try my level best to respond to each comment and each email. So let me know what you thought. If you had success trading this setup, let me know. Now click the like button, subscribe, comment below, let me know what you think. And I'm going to try and make more and more videos for you going forward. So take care.
My name's Howard Turetsky. I've been trading off and on for about 2 to 3 years.
My name's Bryce. I've been trading for only about a year now.
My name is John. I've been trading on and off since 1992.
My name's Todd Stevens, and I've been trading for about 3 years now.
It was a struggle. Emotions all over the place, didn't have any real trading rules, didn't know how to create the right trading rules.
The connections was something I actually really underestimated, but was incredible, because just finding people with the growth mindset, the business mindset, and just improving and making connections is so difficult, I feel, in a sense sometimes, and especially finding people around your age doing it as well. So it's just an amazing opportunity to network and find people who are going to help me grow my circle.
Well, in all the years that I've been trading and all the mentors that I've had, this has got to be the best one I've ever attended, and the best mentors.
The thing I love about attending events with these guys is you get the idea and the knowledge of how much that they actually care about the individual people.
Absolutely 100% would I recommend live traders.
So overall, the conference, to be honest, was A+, pretty much 5 out of 5. It's really hard to tell if someone's legit nowadays, especially in trading, but Jared and Amal are just so transparent, and they don't try to hide the BS.